Let's meet John, a first-time entrepreneur in Texas. John's always dreamed of running his own business and now he's finally ready to take the leap. But like many founders, John faces a crucial decision. What kind of legal structure should he choose, LLC or S Corp? This choice isn't just paperwork, it's the legal armor that will protect his dream or the tax trap that could cost him thousands. Today, we'll walk through John's journey so you can avoid the $12,000 mistake that caught him off guard. John's excitement is matched only by his confusion. He's heard about LLCs and S Corps, but the differences seem buried in legal jargon. He wants freedom, but he also wants protection. As he sifts through advice from friends and online forums, the paperwork starts to feel like a maze. This is where many founders stumble, mistaking complexity for safety or assuming all entities are created equal. Let's break down what these choices really mean in simple, clear terms. LLC or limited liability company is like a flexible shield for your business. It's designed to protect your personal assets from business debts and lawsuits. For John, this sounds like the legal armor he needs. LLCs are popular because they're easy to set up and manage, and they offer a lot of freedom in how you run your business. But there's more to the story, especially when it comes to taxes. Let's see how this shield works in practice. S Corporation or S Corp is a different kind of legal armor. It's not a type of business, but a special tax status you can choose for your LLC or corporation. S Corps are designed for tax efficiency, letting you save money by splitting your income into salary and distributions. For founders like John, this can mean thousands of dollars in savings if you qualify and follow the rules. But the S Corp comes with its own set of requirements and paperwork. LLCs are taxed by default as pass-through entities. That means the business itself doesn't pay federal income tax. Instead, profits and losses pass through to the owner's personal tax return. For John, this seems simple. But here's the catch: all of John's profits are subject to self-employment tax, which covers Social Security and Medicare. This can add up quickly, especially as his business grows. The freedom of an LLC comes with a hidden cost. With an S Corp, things work differently. John would pay himself a reasonable salary, which is subject to payroll taxes, but any profits above that salary can be taken as distributions, which are not subject to self-employment tax. This is where the magic happens. By splitting income, John could save thousands in taxes, but the IRS watches closely and John must follow strict rules about payroll, bookkeeping, and eligibility. John decides to keep things simple and chooses an LLC. He likes the idea of flexibility and minimal paperwork. For the first year, everything seems fine, his business grows, and he enjoys the freedom of being his own boss. But as his profits increase, so do his taxes. John doesn't realize that every dollar he earns is being hit with self-employment tax. The freedom he wanted is starting to feel like friction. By the end of his second year, John's accountant delivers some tough news. He owes $12,000 more in taxes than he expected. That's because as an LLC, all his profits were subject to self-employment tax. If John had elected S Corp status, he could have paid himself a salary and taken the rest as distributions, saving a significant chunk of money. The tax trap has sprung and John feels the sting. John is frustrated and disappointed. He worked hard, made smart business moves, but missed a crucial detail. The emotional impact is real. He feels like he let himself down. This is the hidden cost of choosing the wrong entity, not just money but stress, regret, and lost confidence. For many founders, this moment is a turning point. It's a lesson learned the hard way, but it doesn't have to be your story. LLCs are a great fit for many small businesses, especially if you're just starting out or want maximum flexibility. If your profits are modest or you're not ready to deal with payroll and extra paperwork, an LLC can be the right choice. It's simple, protective, and easy to manage. For side hustles, solo freelancers, or businesses with unpredictable income, the LLC's freedom is a real advantage. S Corp status shines when your business is profitable and you're ready to pay yourself a salary. If your net income is consistently above $40,000, the tax savings can be substantial. S Corp are best for founders who want to optimize taxes, are comfortable with payroll, and can handle a bit more paperwork. For John, this would have been the smarter move once his business took off. Many founders believe LLCs and S Corp are mutually exclusive, or that S Corp is a type of company. In reality, S Corp is a tax status you can elect for your LLC or corporation. Others think S Corp are only for big companies, but even small businesses can benefit. Clearing up these myths is key to making the right choice. Think of your business entity as legal armor. It shields your personal assets from business risks, lawsuits, and debts. Whether you choose LLC or S Corp, this protection is essential. But remember, the armor only works if you follow the rules, keep business and personal finances separate, and stay compliant with state laws. The tax trap is real. Many founders, like John, don't realize how quickly self-employment taxes can add up. Missing the S Corp election deadline or misunderstanding the rules can cost thousands. The best defense is knowledge. Understand your options before you file. Choosing an LLC gives you freedom, less paperwork, more flexibility. But as your business grows, that freedom can turn into friction with higher taxes and missed opportunities. S Corp status adds some complexity, but it can smooth out the bumps and save you money. It's a balance between ease and efficiency. For many founders, paperwork is the biggest hurdle. Forms, filings, deadlines, it's easy to feel lost. But the right guidance can turn the maze into a map. Don't let paperwork become your blind spot. Take the time to understand what's required for each entity and get help if you need it. Not every business can choose S Corp status. There are rules. You must be a U.S. citizen or resident, have no more than 100 shareholders, and only one class of stock. Some types of businesses, like banks and insurance companies, don't qualify. Make sure you check the requirements before making the switch. S Corps require you to run payroll, file quarterly reports, and keep detailed records. This adds complexity but also discipline. For John, this would have meant more paperwork but also more savings. If you're ready to take on the responsibility, the rewards can be worth it. John's story is a cautionary tale. By not electing S Corp status when his business became profitable, he paid $12,000 more in taxes than he needed to. This money could have been reinvested, saved, or used to grow his business. The cost of a wrong choice is real and preventable. John's experience is not unique. Many founders make the same mistake simply because they don't know their options. The good news is you can learn from his journey. Take the time to understand your choices, ask questions, and seek professional advice if you're unsure. The right entity choice starts with planning. Think about your goals, your expected profits, and your willingness to handle paperwork. There's no one-size-fits-all answer, but a little planning can save you a lot of money and stress down the road. This video is for educational purposes only. It's not legal or tax advice. Every business is unique and laws can change. Always consult a qualified professional before making decisions about your business structure or taxes. LLCs offer flexibility, simplicity, and strong legal protection. But they can be costly for profitable businesses due to self-employment taxes. Weigh the pros and cons carefully and consider your long-term goals before deciding. S Corp can save you money on taxes, but they require more paperwork and compliance. If you're ready for the extra responsibility, the benefits can outweigh the costs, but if you're not, the complexity can become a burden. A good accountant or attorney can help you navigate the maze of business entities. Don't be afraid to ask for help. Professional advice can save you time, money, and stress. John's story might have ended differently if he'd had the right guidance from the start. Business laws and taxes vary by state. What works in Texas might not work in California or New York. Always check your state's rules before choosing an entity. Local advice is just as important as federal guidance. If you want S Corp status, timing matters. You must file the election with the IRS by a certain deadline, usually within 75 days of forming your business or the start of the tax year. Missing this window can mean waiting another year or paying more taxes than you need to. It's possible to change your business entity later, but it can be complicated and costly. Plan ahead to avoid unnecessary paperwork and fees. If you're unsure, start simple and revisit your choice as your business grows. Running payroll for an S Corp is more than just cutting checks. You need to withhold taxes, file reports, and stay compliant with federal and state laws. Mistakes can lead to penalties, so consider using payroll software or a professional service. Good bookkeeping is essential for both LLCs and S Corp. Keep business and personal finances separate, track expenses, and save receipts. Accurate records make tax time easier and protect you in case of an audit. S Corp can attract extra IRS scrutiny, especially if your salary is too low. Make sure you pay yourself a reasonable wage based on industry standards. Cutting corners can trigger an audit and penalties. LLCs and S Corp work for both solo founders and teams, but the right choice may depend on your business goals, growth plans, and how you want to split profits. Talk with your partners and advisors before deciding. As your business grows, your needs will change. What works today might not work tomorrow. Review your entity choice regularly, especially if your profits increase or you add partners. Staying flexible is key to long-term success. If you plan to sell your business or bring in investors, your entity choice matters. S Corp have restrictions on ownership and stock classes, which can limit your options. Plan your exit strategy early to avoid surprises down the road. Both LLCs and S Corp offer liability protection, but you may still need business insurance. Lawsuits and accidents can happen, and insurance adds another layer of security. Don't rely on your entity alone. Protect your business from all angles. LLCs and S Corp have annual requirements like filing reports, paying fees, and holding meetings. Missing these can lead to penalties or even losing your legal protection. Stay organized and keep track of deadlines. Good record keeping is more than just saving receipts. Keep minutes of meetings, document major decisions, and store important contracts. This protects you in case of disputes or audits and keeps your business running smoothly. Doing nothing can be expensive. If you ignore your entity choice or delay important filings, you could face fines, higher taxes, or loss of protection. Take action early to avoid costly mistakes. There are many resources available for new founders: online guides, local workshops, and professional advisors. Take advantage of these tools to make informed decisions and set your business up for success. Looking back, John wishes he'd asked more questions and planned ahead. His story is a reminder that the right entity choice is about more than paperwork. It's about protecting your dream and maximizing your success. To recap, LLCs offer flexibility and protection but can be costly for profitable businesses. S Corps require more paperwork but can save you money on taxes. The best choice depends on your goals, profits, and willingness to handle compliance. Don't let paperwork or confusion become a blind spot. Take the time to learn, plan, and ask for help. Your business deserves the best start possible. Knowledge is power. By understanding your options and making informed choices, you can avoid costly mistakes and build a stronger business. Empower yourself with information and take control of your future. Choosing between LLC and S Corp isn't just about taxes, it's about building the foundation for your business. Take your time, do your research, and don't be afraid to seek help. The right choice can save you money, stress, and regret. If you're starting a business, don't let paperwork become a blind spot. Subscribe for more clarity and guidance on building your dream the smart way. Remember, knowledge is your best legal armor.